Hey guys, welcome back. In today's video, we are talking about the new symbol for meme stocks, naked shorts core, why shorts need money, and many more in this video. First, we're taking a look at this. Not sure why meme stocks started trading on a new exchange with a new symbol on October 7th, but it got me curious. I believe the financial instrument being used is a turbo, which is a leveraged financial derivative first introduced by Goldman Sachs in 2004. So when you take a look at this, what you can see is actually the symbol for AMC, GME, and even Tesla, but then you can see what they come under as A3D 7MZ and AOHGDX for GME. And this is what we're seeing. Now, we have seen this in the past multiple times before, where we see something that's for AMC or for GME, but it's obviously under different symbols. Now, bear in mind that this is in the European exchanges, but what we've seen in the past, whether it's with crypto or what we're seeing right now, is that they use these different types of derivatives because for them, it's a way of, like we talked about here, a leveraged financial derivative, or a way for them to try and locate shares of both AMC and GME. Recently, we've obviously talked about what's happening. We talked about the lack of shares with AMC. We talked about the lack of shares with GME. And again, how that's obviously bringing a liquidity problem for the short sellers. So the very fact we are seeing this new whole exchange and why we're not seeing kind of the same movements like we did before. And again, bear in mind, this started in October 7th, would explain, what is happening. We've always talked about this when it's considered offshore, when it's not in the US exchanges, some things don't have to be reported. And so if they're actually shorting all the AMC shares, but on these exchanges instead, obviously they don't have to report it. And the numbers that we could be seeing is way bigger than what we are actually given to us. And so that's the problem we're facing. And there's a big reason for why they do this in other exchanges. And you can see in terms of how firms operate outside of the US. One example is this. Barclays and Citigroup fined after South Korea catches them naked short selling. So recently what we've seen is how South Korea has fined Barclays and Citigroup. Now, the fine, again, it's a very minimal number, $9.5 million. Now, obviously, to normal people, $9.5 million is obviously a large sum of money. But you have to understand, for firms that are making billions of dollars every single year, $9.5 million is only the cost of business. It is not allowing them to actually face any repercussions for what they're doing to the market. But what we can get from this is firstly, how firms are operating outside of the US. Now, bear in mind, they still do this in the US, but the very fact that we are seeing them do this outside shows you when we do see stocks that are listed out of the US exchanges, what are some of the things that it's of course facing, what are some of the manipulation and suppression techniques that they're obviously being used on. Now, secondly, it's about Citigroup. So we shouldn't be unfamiliar with Citigroup. Now, we talked about this in the past, and Citigroup is actually someone who's have synthetic shares of AMC. We talked about the Brazilian ADR shares, and again, we've mentioned this multiple times in the past. So I won't bore you guys by, again, explaining through all of that, but it's to our understanding that Citigroup owns synthetic shares of AMC. And this is what we talked about in terms of how these guys are always the same guys. They use the same tactics wherever they are. And so what we're seeing right now is just a reflection of what they're doing in the US. Remember, Citigroup is predominantly based in the US. The very fact they're doing this outside of the US should give us an insight into really how much they're doing it within the US and truly, what the manipulation and suppression we are facing on the market every single day. Now, when we take a further look into naked shorting, so we saw how they were fined outside of US in South Korea, and now we're seeing from this. So this is from Devin Nunes, who made a letter and said, I want to bring your attention to potential market manipulation of the stock of Trump Media and Technology Group Corp. And this is obviously DJT. Now, as you know, naked short selling shares of a stock without first buying the shares of a stock deemed difficult to locate, is generally illegal to SEC. And now we've actually talked about this. So essentially what he's addressing is, of course, the naked shorts. You guys can feel free to obviously take a look at this, but he's talking about naked shorting on DJT, and some of the ones he's mentioned were obviously Citadel Securities, Virtue. Now he also talks about Jane Street, but you can firstly see Citadel and Virtue. Now, again, we aren't unfamiliar with, you know, Citadel and Virtue. We know in terms of the tactics they've used, we know how, you know, often they are, of course, naked shorting other companies, manipulating them and suppressing their price and bringing their price down, obviously with AMC, obviously with GME. And so the very fact we're seeing these letters shows us, you know, exactly what is happening. Now, the reason why I want to talk about this is because this letter was obviously written in the past. You guys can see here, April 18th, 2024. We covered it when this just came out. But again, going into January, going into 2025, we have obviously the administration of Trump. We're going to be potentially seeing more enforcing of rules. And so the very fact we did see this letter and what's about to happen, we could be potentially looking at, you know, a more regulated market and more punishment for these naked short sellers. And that itself is obviously a good thing when you consider that the ones they will be targeting are Citadel or Virtue, who are both short sellers of both AMC and GME. And again, we've seen this with Jane Street as well, but predominantly Citadel and Virtue. So if we can see them actually being limited and actually being called out on for what they're doing, what the tactics that they've been exploiting, then obviously we could be looking at the fairer market for AMC and GME. Now, furthermore, you can see this. Can't stop the need for capital on synthetic bundles and rehypothecating messes with banks. Enjoy the dip soon. You'll see the rest of the forward contract with Goldman Sachs. Now, one of the things we talked about recently is the illiquidity problem. And what that is obviously how shorts are lacking on capital. Now, there's a reason why this is extremely big. Because you have to understand that the shorts are burning money every single day. The reason for that is because firstly, they need to continuously use money to create synthetics in order to suppress the price of AMC. They rather spend $1 million a day, and again, this is only an example, but they rather spend, you know, X amount of money per day to suppress the price of AMC rather than paying $5,000 for one share of AMC, considering the fact they have to buy back billions of shares. So that's the first thing. The second thing is that not only do they need to create more short positions, they also need to continuously finance their existing short positions. And so you can see how that's obviously eating into their cash. And so as we see the capital problems, as we see the liquidity problem for these short sellers, you can see how they're obviously going to be struggling to continuously suppressing AMC. And that's what they're struggling with. And you can even see here, Alpine Securities, yet another extension. So they got another extension from the NSCC. Now, the reason why I say this is just really to highlight the problem that's in the market right now. You know, yes, we haven't seen this for Citadel, we haven't seen this for Virtue, but we are seeing these for other firms. And generally, when it's happening for these firms, it's showing, you know, overall what is happening. Citadel and Virtue, of course, we know that there are some of the bigger names in the industry. And so obviously what comes with that is, of course, a lot more money. It doesn't mean they have infinite money. It doesn't mean they have unlimited money. It just means that they obviously have a bigger tank than some others. But if you're already seeing the start of failures from other companies, then we know that the situation that's going on within the industry is clearly not good. And so I suspect it won't be long until we'll be seeing some liquidity problems from Citadel. We're already seeing how they need to sell assets. We're seeing how they need to take out more loans. And we also talked about how, you know, Citadel has a potential of selling their stake to raise more money. You know, these are all indications of the lack of money, of the need for money. And so, like I said, it won't surprise me if we start to see these news very, very soon. Now, another thing that's quite big is 6.7 billion of pure GME swaps expire in December, and this Friday is the last quotation of the year. So this was a post that was made, and it's talking about the 6.7 billion. Now, what's interesting about this is, of course, the number. So what he said, again, I always highly recommend people to obviously take a look at this. Now, the reason why I say this is because it's very important, because whilst the calculation comes to is that if one NU, and this is the unit that was given, notional unit, was $1,000, then this will be 6.7 billion. Now, we've always seen the swaps. We know that there is a massive swaps problem for AMC and for GME. Now, we also know that the shorts have done a very good job of hiding these exact short positions that we have mentioned in the past, the swap positions. We've already seen how firms have already gone under because of swap positions. You know, we've seen how Archegos went under. We've seen how Credit Suisse went under. We're seeing how UBS is being affected by these swaps. So we know that then clearly there is a massive swap position, a very toxic swap position that's existing out there that's capable of taking down any firms. But, you know, what we don't know is truly to an extent how big it is. And, you know, if we what we have here is that it's 6.7 billion and it's only one portion of it, then we can obviously understand, you know, the whole grand scheme of the situation. And this is why it's very important. Now, like I said, this isn't something where we look at and we go, okay, swaps expiring in December, it's the countdown, the squeeze is going to happen. No. But what it is saying is that we could be seeing that financial pressure on the shorts this very December, like we've talked about in the past, and the financial tightening, this whole situation happening, would obviously put oil onto the existing position problem that they already have, which is the liquidity issue that I mentioned at the start. But yeah, guys, thanks for watching the video. I'll catch you guys next time.